Hey, what's up everyone? Hope everyone is well. I hope you can hear me loud and clear. So welcome to today's analysis. As usual, I'm going to take you through the analysis and break down a couple of things that I'm looking at. I see a good number of people have tuned in, so welcome everyone. Welcome to today. For those who are new, those who do not know me, I'm Caleb CK, and basically I do analysis on Wednesday, Ken does on Mondays. Friday, any of us can do it, but that's how we normally do it here. So today I'll take you through what I'm looking at in the markets, what I expect to happen. I have a couple of few good analysis that I think will pan out quite well. Apart from that, it's very important to know that today, later on, we have interest rates decisions coming out from the Bank of Canada and the Bank of America. The one that most people are speculating on and watching is the Bank of America. Not Bank of America, let's just call them Fed, so the Federal Reserve. It's very important to watch what they're going to do and what they're going to say. So a lot of tension is around interest rates and what they're going to see, and that's why we saw cryptocurrencies drop earlier on was it over the weekend? Over the weekend, we saw Bitcoin dropping down to about $34,000. We saw most cryptocurrencies dropping. We've seen things like Dow Jones, all those things, stock market, all dropping. So that's important to watch. So I'll show you a few analysis, what I'm looking at, and then you can take it on from there and just use it. As I keep saying, we're not here to give you signals. It's just to show you what I have, what analysis I have, and it's up to you to decide what to do from there. So if I share my screen, so starting off, so simple. So this is trading and this is Forex Factory. So this is what I use to check news every single day. So every start of the week, I'll use my Forex Factory just to look at what do I see coming out in the market and what do I expect. So today is Wednesday, and you can see we have red flags today. So meaning the Bank of Canada. So here we have Bank of Canada at 6 p.m. Okay. Then at 10 p.m., that would be at night, we have FOMC. The Feds who are going to release their interest rate. So this is what I'm paying attention to. So today I think we'll have a late night. We'll be working till late, okay, and listen to what the FOMC have to say about their interest rates, okay. So with that said, if I go to my analysis, what am I looking at? Before I go to that, I think if you're in our Discord group, I think we haven't been sharing much analysis, especially I'm the one who posts under the market structure strategy, but I'm thinking of sharing more or less my journal. I'll be sharing my journal, I think, there, so that you can just be checking it out. I normally update my analysis like 2 or 3 times a week, okay. So I just do my analysis for the pairs that I'm normally watching, and I think I'll be sharing that link there very soon, but I'm still thinking about it, instead of always going and pasting one by one analysis. But anyway, with that said, let's look at the analysis. We have good time, so let me maximize it as well. So let's start off gold. So simple, gold. Look, what are we forming? Long term, this is the daily chart. We're within a triangular formation. I've been watching the support level 1725 and 1830. It's been very strong resistance level, but earlier on last week we saw a break above, okay. And I keep saying this a lot: if a market or if a level is of significant resistance or significant support, what do we expect to see? We either need to expect to see a rejection like what we're getting at 1830, rejection and a drop, or if we don't get that, we are expecting to see a very strong breakout, and that's what we got here. You can see this strong breakout to the upside, a very strong breakout to the downside, and now we've gotten a strong breakout to the upside. Then the 1830 level acted as a support level, okay, and market has been moving up. But what is of importance, what am I watching? So long term, I'm watching this triangular formation, okay. This can easily, okay, this can easily be an impulsive move over here, okay. This whole impulsive move, then a sideways movement, and then another impulsive move to the downside, okay. So we can expect another impulsive move to the downside. However, when I'm trading triangles or when I'm watching triangles, I never speculate on either direction to happen, because under my class, if you come and I teach you under my market structure analysis, I keep emphasizing that a triangle is a form of a consolidation pattern or consolidation correction or a sideways movement, okay. And whenever we're having a sideways movement, triangles are sideways movement, rectangles are sideways movement, and whenever we're seeing any sideways movement, the best thing to expect out of this one is a breakout of either side. So I'm never really holding a bias to one side, we can also see a market breakout to the upside. So what do I normally wait for? I just wait and see the breakout will come out on which side. Though with that said, it's clear to see also that market is moving with low momentum. Okay, so sometimes when I'm expecting to see a breakout of either side, you see how market moved with momentum and we broke this resistance level, how we broke to the downside. Now however, over here, what I'm seeing on gold, and this is highly on my radar, is this pattern over here. Okay, so market is sort of moving and losing momentum. Okay, losing momentum as we head above towards the resistance, the trend line level. Okay, so with that said, what I'm watching, if I go down to the 4-hour chart, okay, so simple top-down analysis, I'm watching to see, so you see how market is coming in the form of sort of a flag or a channel-like formation, respecting the upper boundary, respecting the lower boundary, and moving higher. Okay, so if market can come up to this resistance level, continuing with this slowdown in momentum, then I'll be expecting a touch of 1870 and a quick drop back down to the 1762 level. Okay, and if market continues with that momentum, I'll be expecting much more momentum to come to the downside, especially with the interest rates coming out. So today's interest rates will act as a very strong catalyst of either two things: market spikes and touch this level, moves to the downside, or we have a breakout to the upside and market continues rallying to the upside. So I'll be paying attention. Of course, I won't enter blindly at this level. What I'll be waiting to see is how market is going to reject this level. How will we get a shooting star? Will we get an engulfing candlestick? There are those reversal candlestick patterns that I want to be watching at this level to ensure that I get a good short level. If not, and if market breaks to the upside, then I'll be staying out of this market and seeing what will happen after that. Okay, so that's what I have on gold. I believe that's a solid, good analysis. Okay, now moving on to my other pairs. So gold is what I have mainly on my radar this week. Okay, so if I come to this, is Aussie dollar. Aussie dollar has been beautifully in a downtrend. Okay, you can see this lower lows, lower highs, lower low, lower high, lower low, lower high again, and market started falling to the downside. I was waiting for a short level around this upper level. I didn't really get it. However, market formed a very good sort of flag wedge-like formation. Okay, so you can see this impulsive move. Okay, look at this corrective pattern. Market respected the upper boundary and we've seen a good drop. We rejected this trend line again, then market dropped, breaking out and going down to touch the 0.7100 level, okay, which acted as a support and a quick correction back up. So what I'm waiting to see is, can we get a sort of a two-leg correction, maybe to come to this level, okay, and then a further move to the downside. So that's what I'll be paying attention to, okay, for the next few days, especially later on today with the interest rates. Can we get that move and market finally gains momentum to break the 0.7100 level? Okay, so that's what I'm watching on this one. I have nothing much. I'm just paying attention also to this correction over here, waiting to see, can we get in the form, let's go to the 1 hour chart and see maybe if it can be a flag formation. Okay, so this impulsive ABC correction, touch this level and move further down. So that's what I'll be watching on that one. USD card, interesting. Okay, if I go to the 1 day chart, on the 1 day chart, looking at this, so you're seeing this pattern that's forming. Okay, impulsive move, correction. Okay, so impulsive move, that's how market moves in the direction of the trend. Okay, so impulsive move, so impulse, correction, in the, this was a form of a symmetric triangle, impulsive move, symmetric triangle, impulsive move, and on the bigger time frame, this is an impulsive move, and we're forming sort of a correction in the form of a flag formation. Okay, but the 1.2950 level, this level, acting as a very strong resistance, and my support is the 1.20 level. Paying attention to those levels. You can see over here we got a rejection, market moved further down. But currently what I'm watching is this third trend line bounce. First touch, second touch, third touch. Okay, can this third touch be enough to propel this market to the upside? That is what I'm watching at the moment. Don't have any bias at the moment. Okay, so you can see how we got that rejection at that third trend line bounce. It was a very good, if you look at it on the 1 hour chart, it was a very simple, easy move. Okay, which if you caught a buy, it was a very simple buy level, okay, at least back to this resistance level with a good clean support just below here, okay. So you can see this buy. Why do I say it's a very clean and nice one, okay? It's because market came with an impulsive move, got a rejection, okay, came up to this level, then came back down, and as I keep saying, market came back down towards this support level with reducing momentum. The same thing I'm waiting to see on gold. The momentum is not coming very strongly, and that's why we came and got sort of like a flag formation, and market shot all the way back up to the resistance level, okay. So if I go back to the 4-hour chart, so you can see how clean that was, clean and precise. Market acted as a support, quick rally back up. Market even didn't disturb, no sideways movement, straight to target, okay. But what are we experiencing right now? We're currently having a third trendline bounce of the counter boundary. So you can see this first touch, second touch, and third touch. So I think many people took their profits off this level, and that's why you're seeing the correction of market moving further down. So I don't have any clear analysis on this one, so I don't have any bias on what I expect to happen. There's no clear pattern currently. Like down here, the clear pattern. Over here, I'm waiting for more information, more candlesticks to form to give me a more clear and precise pattern, so that I can know which direction with probability on which side it's going to go. So that's what I'm watching on this one, sitting out on it, nothing important. And US 30, this is Dow Jones for those who are not familiar with it. Basically, it covers the top 30 US stocks in America, the top companies, the big companies in America, okay. So ever since we topped near the 37,000, trying to create new highs for the year, all-time highs actually, market has fallen back down to the 33,000 level, losing about 7,000 pips in the past 2 to 3 weeks, okay, which is a lot. If you trade markets and you know pips and all that, 1,000 pips is a lot. So imagine losing 7,000 pips. That is a lot, and that's why most of the stocks markets are down, because more or less it's the speculation that I'm talking about around the interest rates. As a rule of thumb, what normally happens when interest rates are high, tightened when they're increased, okay, because right now they're at all-time lows, okay, because the Fed had to reduce the interest rate so that they can help kickstart the US economy back, okay. And that was back then. That was when Corona hit. That was down here, okay. So you can see how market, if you understand fundamentals, how it changes the market, okay. So over here is where market, the Fed started, there was a lot of Corona speculation, and the market dropped. Around this lower level is when the Fed started to lower the interest rates, and that's why we've seen almost 2-year bull run in this market, coming all the way from 18,000 and topping at the 37,000. So 100% increase in this market in the past 2 years, okay. However, at this level, this top level, I remember during the November, December, during that time, the Feds talked about increasing interest rates, and you can see how market sentiment has changed, and that's why we're starting to see a drop. I don't mean to say that now the market has turned and that the market has reversed and we're going to be in a bearish territory. No. I just mean there has to be a correction, a major correction for this, okay? Because when the Feds increase interest rates, it's more expensive to borrow money, and that results in little money being invested in the stock market, and that's why you're seeing that drop. So it's a rule of thumb what normally happens. So this is still what I'm watching. No major analysis on this one. I've just seen this trend line has been broken. So if I zoom out where this trend line started back down here, okay. So I'm seeing how market had that first touch, second touch, third touch, market went to new highs, then now we're seeing a drop, okay. So I'll be paying attention to this one, seeing how it's going to fare out in the rest of the week and as we enter into February. With that said, I think moving to the other pairs, which I don't trade, but I'll help you guys do analysis, because just to be fair for everyone, okay. So what am I looking? This is Euro USD. I'm sure most of you trade this pair because it's what most educators, most people recommend, trade this pair. I don't trade this pair because of certain reasons, but I do analysis on them, especially with my students. So what am I watching on this one? Market has been in a downward trend, okay. Lower lows, lower highs, lower lows, lower highs. And recently, as I shared, if you watched the YouTube that I shared last week, we were talking about this short coming, okay. So you can see how we had that first touch of the trend line, second touch, a third touch in the form in the confluence of a flag formation. A very good high probable trade that I don't want to be missing. Such trades you get, they're very rare. You can get like 2 to 3 in a whole year. Okay, so you don't be missing out on such trades. So ever since we got that bottom top, we're seeing market coming back down. I still expect further movements to the downside. I'll be seeing if the interest rates today will act as a catalyst, but I expect market to continue dropping on the Euro USD as the dollar continues to strengthen across the board. Okay, so that's what I'm watching on Euro USD. On the 4-hour chart, same thing. It has been a good drop ever since we got that top. Market has been falling quite smoothly at the 1.1460 level. Currently market is at the 1.13 level, so market has dropped ever since our entry around 160 pips. So a very good drop. It's a more than 50% towards the target, and the target is at the 1.120 level. Okay, give or take. So that's what I'm watching on this one. GU, I think there's a good analysis on GU that most people missed. Okay, so one thing, what I want to teach you on this one is how to be adaptive with the market. Okay, so as market was moving, we had these high highs. Okay, market came down in the form of a channel like formation or a flag, depending on how you call it. Okay, so we had a very good drop. So you can see this lower lows, lower high, lower low, lower high, lower low. Market was respecting the channel quite well, and then market came back up and broke this level. Okay, so once we broke out, I'm sure most people turned and started buying. Okay, but still there's a lot of dollar strength in the air. Okay, so if you adjust your trend line just a bit, okay, so if I take this one, let me just put it as a trend line. Once, as a rule of thumb, normally when I'm analyzing the market, once a trend line is broken, okay, I don't switch very fast to say that the market has changed direction. What I normally do, I come to the next lower high. Okay, so if you just bring this lower here, okay, because the trend is still forming lower lows and lower highs, nothing has been broken, and adjust this just a little bit, you can get to see that market actually had another trend line bounce. Okay, so you can see market is still forming lower lows, lower high, lower low, lower high, lower low, lower high. Okay, market hasn't broken that formation, and that's why you're seeing market moving lower. So if you did not adjust your trend line and started buying, then you've been really squeezed in this movement to the downside. Okay, so I think that's just a lesson to teach you. I don't trade this pair, but I think it's something you should take out of that. Always remember to move with the market and adjust your key levels and trend lines whenever there's a breakout or a bounce off it. Okay, so this is it. I don't know, I don't have any speculation on this one, whether it will go down or further up. I don't trade this pair, so I have no analysis. I just wanted to show you how to adapt to the markets whenever the markets are moving. Okay, last but not least, USD Jpy. For those who trade this one, I think something you should pay attention to is how market respected this support level. Okay, on the 4-hour chart. So market was moving to the downside, impulse to the upside, then sort of came back down with the losing momentum. What I keep saying over and over, it's better seen on the 1-hour chart. I'll keep emphasizing this. Always pay attention to how market is approaching a key level. We had a bounce of this level, impulse to the upside. Market came back down in the form of a channel like a flag formation, and that's why we are seeing a lot of support at this level and market bouncing off it. However, I'll be very speculative about this one, not really saying that market will go to the upside. Why is that? It's because ever since we got this bounce off here, market has also lost momentum to the upside. So I'm always paying attention to how market is moving to either direction. I don't have any significant analysis on this one. So as well, with this loss of momentum, we can see market continuing to consolidate here for quite some time and expect any direction market to head. Okay, it can either continue to the upside or to the downside. If the Feds talk about some interest rates being increased and works in the favor of the dollar, meaning the US dollar gaining strength and moving up, then you can expect this momentum to continue to the upside. If not, then if this level is broken to the downside, it will be a very clear short, especially if we break with momentum. Okay, so with that said, that's the last analysis I had. Looking at the dollar index, I'm just looking at the long-term projection. Okay, just the long-term projection on this one. I'm seeing the trend is to the upside. Okay, and as a rule of thumb, the trend is a friend until the trend breaks. So you can see market has been forming higher highs, higher lows, higher high, higher low, higher high, higher low. With respect to the trend line, I won't be going against this trend until it continues. Okay, so I'm still expecting the market to continue to the upside, and that's what I'll be sitting out and watching. Okay, so so more or less that's what I'll be watching. So yeah, that's pretty much it. That's pretty much it. Simple analysis, straight to the point. I hope you've enjoyed it. It's clear. I like to keep it clear and precise. I don't use any indicators. I use pure chart analysis, so I don't pay attention to indicators and all that. That doesn't mean that the indicators don't work. Most of my teammates use indicators and it works pretty well for them. The way I understood the markets over the years is that I just use pure price action and break down the markets as clear as it is, just the way I've shown you, using trend lines, key levels, and market patterns. So there are certain market patterns that I normally watch, which if you take our course, I'll teach you the patterns that I watch and how to trade them and why I use them. Okay, on top of it, I've also back tested them over 20 years of data, and that's why I'm very confident when I'm using it. And always, I never go and start system hopping, going from one analysis to another. I stick to that one all the time. So that's it from me. Nice to see you guys. I'll upload this video on YouTube later on today, so if you want to go through it over again and see how I analyze the market, you can watch it there. So thank you for tuning in. I'm very happy to see most of you guys. I had people from Nyeri. We went to Nyeri over the weekend. I heard most of you will join this Zoom, and I see the person who invited us, Abraham, here. So thank you, Abraham, for joining, and I hope we will come soon and see what you guys are doing back down there. So thank you for the invite, and I'm very happy to see most of you. So I'm sure most of you remember me, and for those who are not here during the start, I'm Caleb, and thank you for joining. So that's it from me today. I'll see you guys soon. The next analysis will be on Friday, 10:30 a.m. same time, same place. So I'll see you there, and thanks for joining. See you soon. Peace.